So in today's video, we're going to go over some market data. Huge data, obvious reasons. Inflation, it is happening on Wednesday. Hugely important for the crypto market and obviously the stock market. I want to try in this video to break it down in real, simple, logical sense so you understand. So you understand why there's bigger things at play here. Psychologically could affect the markets pretty drastically, right? So first thing we need to talk about is obviously CPI. The consumer price index, which is essentially inflation, right? So every month we get data. Every month for a while we have been smashing through the forecast. The previous was 8.6%. They're forecasting 8.8, maybe around 9%, maybe around 9% coming. So why does this matter? And let's talk about one thing and one thing only: quantitative tightening. I want to break it down in simple logic, right? And why certain things are rising. You've probably noticed, right? So let me just go on to here, bear with me. So in real, simple, logical terms, right? Quantitative easing, QE. This was what happened from roughly June 2020, okay? Increase the liquidity into the market, basically buying bonds, etc. Reduce interest rates. This creates an opportunity for people to invest. You've probably noticed from June 2020 to roughly November, December time, 2021, the market was very, very bullish. Very, very bullish. Not the time to do certain things in the market for obvious reasons. Now let's flip it. QT, quantitative tightening, essentially the absolute opposite. Reduce liquidity from the market. Simple. Increase the interest rates. Simple. Create fear from investors. If you're pulling money out the market, if you are no longer buying bonds, if you are reducing a opportunity to starve liquidity, which is the biggest form of movement in the market, people panic. What's happened? Well, boys and girls, we know what's happened. The market's dropped. Con of it, con of QE, increase inflation. The pro of QT, decrease inflation. So overall, matter of fact, with this, we as a nation, as a world, as a species, are trying very randomly on an experimental basis, trying to reduce the spiraling nuts mentalness of the data into reducing basically inflation, which is hard, right? So what's this knock-on effect? Well, the knock-on effect's pretty simple, isn't it? Increased inflation equals increased cost of living, equals basically a problem on people's pockets. That increases the likelihood that people are going to cancel or change their spending habits. Therefore, it is a problem. Why is the first one of these, post QT, so important? Basically, this is the first real full month that we've actually got some data once QT has came into effect. There's a high chance it's probably going to carry on going on for a bit longer until it goes down. Now, one of the obvious questions is, why don't they not turn it back to QE? Well, it's not going to fix anything, is it? Let's be fair here. It's really not going to fix anything at all. And that's where the biggest problem lies. We cannot live in a world with increased inflation. We just can't. We can for a small time period, but not forever, because we know what's happened elsewhere around the world. It creates problems, it creates wars, it creates all kinds of issues in life, and we don't want that. Let's be fair here, we don't want that, especially if you live in the US, if you're living in Canada, the UK, most of Europe. We're not used to that condition. Some countries have always had issues and they go back generations. The US though, not always. That is a big problem. So let's talk about other things. The stock market, okay? Is it priced in? Well, this is the thing. Ultimate obvious question. We do not know when the bottoms are in. We do not know how people, companies, institutions, groups of leaders, people, what they say, what they do, how they act. The behavior of an individual is what guarantees and gets you success. If you're rubbish, guess what? You're probably going to do bad. If you're good, you'll probably do better than others. We are playing a game of speculation and a game of risk. That's the obvious truth here. So we do not know if more and more investments are going to struggle. I'll be honest with you. The data that came out a few weeks ago saying that this was the worst first quarter of a year in 40 years is a big telling sign that I do feel that the prices have dropped quite significantly, but also it's only 21%. We know in the past other crashes have had further, and this is kind of the start of the bear market essentially for the stock market. We have had a 14 to 15 year bull market. Got to remember that, and that is obviously contribute to a lot of things in terms of what we're used to in the crypto world, and obviously other markets in terms of passive income as well. It's helped, but is it really going to affect the stock market? We don't know. The biggest problem with a recession, it's not so much the stock prices, it's the spending habits of people. But when you add the additional element of reducing liquidity from the market, you're probably going to get a liquidity crash. We do not want that. Already we're seeing reports in China of liquidity crashes in terms of like people being stopped to be used in banks and stuff. That is really alarming. So let's talk about the future of the crypto, right? Because it's an important topic. Terra. The ECB have got involved recently saying that stablecoins are not practical as a mode of payment, right? So all of these little bits of news articles, which we know anyways, is majority of this channel is crypto. I will be doing more of the financial side of it in the future. But the reality is we already know that we're nowhere near yet. I don't think anywhere near adoption. Everyone thought it was adoption. I didn't. It all turns out that it was actually leverage. Problem, right? When you look at all these venture capital firms, big problem. So it's fine in that way, but in reality, this is a news grabbing headline. It's only just came out recently. Not got many shares at the moment, but I think it's a grabbing element because it's got the ECB in it. The European Central Bank are going to create a little few headlines and it's going to get filtered throughout the world. It's going to look bad, and then all of a sudden these titles will start to change. That's a problem. The next bit is the obvious one. Regulation, boys and girls. We know it's coming, but when? How are they going to do it? What are they going to do? This is the perfect situation to create panic in any market, even if you're in crypto, even if you're in stocks. Stock market may panic on this because they want to use cryptocurrency as a form of liquidity. If they cannot do that, oh dear, problem. So we've got to look at that as a situation. We've got to look at certain things. But for me, I've always said that regulation calls will be a big move. It'll be a sharp, short shock, and it'll be like, oh my God. But we'll see how things go. But let's talk some charts, right? I do apologise if I sound croaky. The reason being is because I have got COVID, which is lovely, but I'm feeling fine. I just got a bit of a croaky voice. Anywho, right, as I've been talking, and as I put that bit of info on, the reason why this chart, the dollar index, is going so violent is for obvious one reason only. People are taking their money out of the markets. That liquidity is exiting the market, and where's it going to go into? Guess what? People's pockets, right? They're going to take their profit. We've had a massive bull market. It's a great time to take profits, and this is why the dollar strength is getting stronger. This is why other currencies are getting weaker. You know, at the end of the day, it's the strongest currency, right? It's the dominant leading currency, the dollar, and that's why. So everyone on YouTube, everyone on Twitter has been saying this is going to come down, it's going to come down, double top, bearish divergences. No, it's not, because of the fundamentals. Do not chart that. Just look at the trend. It's just data as candles. It's very straightforward. Now, let's talk about BTC. Why is it important? Well, it's not really a hedge against inflation. Let's be honest here. It's not really worked its job. However, it's a great alternative as an investment, but it's also been getting battered. It's not doing as bad as some coins. Some coins are doing better than Bitcoin, the likes of BNB, but that's pretty much it, right? In reality, having Bitcoin isn't a bad idea. It just depends when you bought it, like any asset. In my opinion, we're going to find some demand here. Whether that demand is seen through or not is another thing. Why? Wednesday, CPI data. Perfect storm for a crash here. Perfect storm. Because what's going to happen? People are going to panic. And what is Bitcoin mirroring right now? Well, let me tell you. It is literally mirroring this. On the short time frames, if you're looking through it, this is basically what's creating the moves right now with BTC. Any push up, guess what? BT follows it. If there's any push downs, BTC will then follow it again. Simple, right? So, watch the stock market first, and then look at what is happening with the dollar. A strong dollar is always bad for crypto, usually, right? When you look at the past and the data, look at when we go down, look at when we go up, you'll see the opposites happen, right? Another thing to look out for, and I always talk about this one, the USDT and obviously the dominant stable currency market. What is it doing? Up is bad, remember? Up is bad. Remember that, write it down somewhere. If this is going up, it's bad for the market. If it's going down, it's good for the market, right? Because why does that matter? It's what people are doing. You are trying to get ahead of what people's decision making is. If people are panicking, it's going to get worse, isn't it? If people are not panicking and getting hyped up and it's getting exciting, it's going to get better, right? It's just kind of how it all works, right? So I'm hoping this has helped you understand that the market isn't too bad. We're just kind of following the emotion of people right now, and the decision making is going to create those decisions to become more inflated or more interesting, more harsh or whatever, right? But in reality, when we look at the market, right, we have dropped from the peak essentially all the way up here, by the way, down to this wick here, about 71%. I personally believe, not financial advice, I think we will go lower. That's my personal thoughts. Am I going to chance it? Don't know. Depends on the altcoins, depends on how low they go. I have got a number in my head for when Bitcoin goes to a certain point, I will buy it. I'm not going to reveal that for obvious reasons. But fundamental wise, I am not worried about crypto. I'm worried about everything else. I'm worried about the liquidity crisis we may have. I'm worried about the inflation elements. And I'm worried about quantitative tightening not actually working. Will they turn on the printer though? Probably not. That would be a very, very stupid move and more likely create more panic, and probably people will sell off their assets because they will want to have cash short term because it will get volatile. Anyways, if you enjoy my stuff, sorry if I do sound a bit weird, but yeah, give it a like, comments, etc. And I will see you again on Friday. And I'm hoping that the market hasn't totally died. If it is pretty crazy, I may well do an additional video this week, but we'll see how things go.